Are you ready for an impending economic crisis? Well, hold on tight because renowned financial guru Robert Kiyosaki and the author of the best-selling book Rich Dad Poor Dad is sounding the alarm. Known for his insightful perspectives on the financial world, Kiyosaki has recently issued warnings that carry significant weight. These warnings have the potential to impact your financial decisions and shape your future. So, grab your seat and get ready to dive into the intriguing world of Kiyosaki's latest insights. We will also explore the significance of his words and how they could reshape your financial strategy. Robert Kiyosaki and George Gammon, during an episode of the Rich Dad Radio, engaged in a fascinating discussion that sent shockwaves throughout the financial world. The topic is an economic tsunami. Yes, you heard it right. These financial experts delved into the possibility of a massive crisis that could hit global economies like a tidal wave. And we're not talking about just any ordinary wave here. We're talking about a tsunami of epic proportions. Brace yourself for the sheer scale of this potential catastrophe. As major financial institutions like Credit Suisse, Deutsche Bank, and the Bank of Japan find themselves caught in the crosshairs. It's no small matter, my friends, and the repercussions could be far-reaching. But before we continue, we want to welcome you to Capitalista. Please give a quick click on the like and subscribe buttons down below. Now let's get back to it. Kiyosaki also drew a fascinating comparison between the impending economic tsunami and the real-world tsunami. Just like a powerful wave crashing onto the shores, this economic tsunami threatens to disrupt and shake the very foundations of the monetary system. The danger it poses is not to be taken lightly. Just as a tsunami can cause devastation and chaos, the impact of this economic turmoil can have far-reaching consequences for economies worldwide. It's a metaphor that perfectly captures the magnitude of the situation. So imagine yourself standing on the shore watching as this colossal wave approaches. And the question is, are you prepared for the potential aftermath? Kiyosaki and Gammon's conversation shed light on some warning signs that shouldn't be ignored. One particularly significant sign they discussed was the 2-year treasury yield surpassing the 10-year yield. Now, this may sound like a bunch of financial jargon, but let's break it down. It basically means that something is off balance in the economy. It's like a seesaw where the shorter-term yield becomes higher than the long-term yield. It's a bit like seeing a dog wag its tail instead of the other way around. Something unexpected is happening. Kiyosaki points out that this crack in the foundation of the monetary system reveals its flaws. It's like peering behind the curtain and seeing the truth. Our current system, which creates money out of thin air, it's not as sturdy as it appears. So it's important to put on our detective hats and explore how this imbalance in the treasury yields could be a telling sign of an impending economic storm. Moreover, Kiyosaki believes that the current monetary system is fundamentally flawed because it creates money out of nothing. He argues that this artificial creation of money is a crack in the system's foundation. And when this crack becomes visible, it exposes the system's artificiality and raises questions about its sustainability. If the American empire were to face a downfall, Kiyosaki predicts that the US dollar, which currently holds the world's reserve currency status, could experience devaluation. This devaluation would mean the US dollar's worth would diminish compared to other global currencies. In addition, the implications of such a devaluation could be significant. It could result in a loss of confidence in the US dollar as a reliable source of value and a medium of exchange, and this could have far-reaching effects on international trade, investment, and the global financial system. Kiyosaki also expresses concerns about introducing central bank digital currencies or CBDCs, specifically highlighting the FedNow CBDC project. His worry centers around the potential loss of privacy associated with CBDCs, as they can enable surveillance and tracking of individuals' financial transactions. In Kiyosaki's view, implementing CBDCs could result in a situation reminiscent of George Orwell's dystopian novel 1984, where a surveillance state controlled people's lives. He draws parallels between the government's ability to monitor and control financial transactions through CBDCs and the intrusive surveillance depicted in Orwell's novel. Kiyosaki emphasizes the importance of privacy and individual freedom in financial transactions, and he warns against the potential implications of a system that enables constant tracking and monitoring of individual spending habits. He believes the widespread adoption of CBDCs could erode personal liberties and lead to a society where a centralized authority monitors financial transactions. Now, let's shift our focus to Kiyosaki's recommendation for protecting ourselves during this economic crisis. He strongly endorses safe haven assets like gold and silver, which have a long-standing reputation as a hedge against inflation and uncertainty. These precious metals have shown remarkable resilience throughout history, retaining their value even during economic turmoil. They serve as a store of wealth that can withstand the impact of inflation and provide stability when traditional financial markets experience volatility. Kiyosaki's endorsement of gold and silver stems from their historical track record as reliable assets during times of economic uncertainty. Their scarcity and tangible nature make them attractive to investors seeking a safe place to preserve their wealth, and by investing in gold and silver, they can diversify portfolios and mitigate the risk associated with traditional paper assets. These precious metals offer a tangible form of wealth that is less susceptible to the fluctuations of fiat currencies and the potential devaluation of paper money. Now let's talk about what Kiyosaki's perspective on Bitcoin as an alternative asset. He sees Bitcoin as a potential store of value similar to gold, silver, and real estate. Kiyosaki believes that diversifying one's portfolio to include Bitcoin can be a smart move. While acknowledging the volatility of Bitcoin, Kiyosaki remains optimistic about its long-term potential. He compares it to the other tangible assets like gold, silver, and real estate, highlighting its ability to hedge against the potential devaluation of fiat currencies. Kiyosaki acknowledges that Bitcoin has experienced significant price fluctuations in the past. However, he views lower price levels as buying opportunities rather than reasons for concern, and he sees potential for Bitcoin to rebound and deliver substantial returns in the future. But it's important for you to take the information presented here as a starting point and conduct further research. Financial decisions should always be approached with caution and careful consideration. Considering the insights shared by Kiyosaki, you may want to explore safe haven assets such as gold and silver, which have historically proven to be resilient during times of economic uncertainty. You may also consider alternative investments like Bitcoin, recognizing its potential as a store of value. However, it's crucial to remember that investing involves risk and individual circumstances vary. We advise to seek professional advice and thoroughly assess your personal financial goals and risk tolerance before making investment decisions. By staying informed, conducting research, and seeking different perspectives, you can better navigate the complex world of finance and make informed choices for their financial well-being. Remember, preparation is key, and considering a diverse range of assets can help protect and grow your wealth in uncertain times. So, would you consider following Robert Kiyosaki's advice and invest in safe haven assets? Let us know in the comment section down below. That's it for this video. Don't forget to express your gratitude by clicking on the thumbs up button, following Capitalista, and enabling notifications to stay updated and won't miss any of our future uploads. See you next time and stay safe.